Dear WAC management, dear WAC conference participants, firstly, I would like to thank the WAC organizing committee for inviting me to present you today a paper with the title Strategic View on Rosin Supply, Demand Cycles, and the Impact on Speculation. Thank you very much. Well, let me start with a question that I would like to address to you and kindly ask you to reveal yourself. Who has been confronted with speculative rosin business lately? Please raise your hands. Okay, not so many. I can see many of you have a good understanding of how to encounter speculation. But let us immerse into this topic a bit more in detail. What is or what means speculation? I'm sure everyone has its own experience and definition. I will give you here a quote by Henry Ford that is easy to read, honest and real, also in conjunction with our business. Speculation is only a word covering the making of money out of the manipulation of prices instead of supplying goods and services. This quote, ladies and gentlemen, might sound for the one or the other unconventional, but in the end, it reflects what we are confronted within our business day in, day out. Our strategic view on rosin supply, demand cycles, and the impact on speculation will enable everyone interested in this topic to see the fundamental developments of such an instrument, with its potential negative impacts, not only for the buying, but also for the selling side, and finally the whole market. Today I will show you how the price of the raw material rosin has changed over the past decades and influenced, or better say, still influences actually, the behavior of the market players. And I will show you how one can possibly avoid more often a negative and rather can influence positively the impact of speculation. I will show you this by illustrating the historic development of the rosin prices over the past decades, with its results and consequences. Then switch over to the actual situation in the market and will give you information on applicable strategies and most probably very important for all of you that are purchasing rosin, recommendations in these regards. As for the relevance of the data that you will see now, the emphasis is on rosin that is used in the adhesive and sealants industry and market, and nota bene, complementary to other raw materials that are used in this field, such as hydrocarbon resins and tall oil rosin. Also, it is to be mentioned that China domestic rosin demand still is on top of the list from a consumption point of view, and therefore ranking first from a usage point of view and consequently and subsequently leading the data relevance. In this first graph, you can see the historic gum rosin price development of the past 90 years. This graph maybe is familiar to some of you. As you can see, gum rosin price experienced in the 70s a peak of around $3,100. If we now consider also the respective important exchange rates at that time, one will see that gum rosin value was far higher than today's prices. Let us focus on the past 15 years price development now. Of course, you may also are all aware of today's prices for rosin, but allow me to highlight for you some very important events of the past 15 years that have, in our point of view, influenced prominently the price developments and levels that we have today. Some of you may remember April 1997, where Chinese export licenses were abolished. This abolishment was an implication born out of heavy gum rosin smuggling through Hong Kong trading companies. As a further consequence, from 1997 to 2004, the price of rosin mirrored the balance of demand and supply. Why was that so? Chinese gum rosin price development from 1997 to 2004 mostly was influenced or even dominated by some few strong European rosin modifiers. And this was the reason why the rosin price looked kind of stable. But in fact, we're on a too low level for producers in China, though being attractive for European modifiers. Basically, this was the reason why it became more and more interesting for Chinese rosin manufacturers to modify the rosin by themselves and export more and more modified rosins over the years instead of the pure raw material gum rosin. As a result of this, the price elasticity of the demand decreased, since Chinese rosin modifiers had limited alternatives to replace or sidestep Chinese rosin with other raw materials. Neither they had the possibility to import gum rosin from any other territories or regions, such as Brazil or Indonesia, nor they had any noteworthy quantities of tall oil rosin, such as it was and is still available in the US and also in Europe. The same is with the mainly in Europe and the US important substitute hydrocarbon resin, that still today is kind of very short or practically inexistent in China. Although we must consider that actually around 20 new hydrocarbon resin factories are being built in China, which will change the situation for this raw material and new. As a consequence, the price volatility began, and the trend is unbroken up to now, since summer 2005. Now, how did that come about? What was the reason for it? We see two main situation-influencing reasons, namely the price development and the parallel to developing stock levels, and not to neglect, increase of speculation. This not only from market makers at the beginning of the market structure, such as farmers or crude gum brokers, but also from private equity investors with so-called hot money. We can visualize these two elements of influence in the next graph. I have added to the rosin price development that I have shown you right now the respective stock availability of rosin laid in the largest and most important rosin harbor in China, namely Huangpu Port, south of Guangzhou. Majority of these quantities are already registered for export, therefore not destined for the domestic consumption. Now, the greater the physical availability of a raw material is reduced, the higher is the price volatility of the same, since an additional or increased demand can be compensated only over the price and not through stock withdrawals. The consequence of such volatility is that the price elasticity starts fading. Let me show you the same chart by highlighting only the past 5 to 7 years. A higher volatility is equal to a shifting of demand onto pricing. Due to this increase of volatility, speculation has increased as well. This, as mentioned before, mainly affected by external influencer. Again, increasing volatility leads to increasing speculation and vice versa. For a better visualization of this tendency, here you see the same period by using the yearly averaged figures. If the price would be always flat, nobody would be interested to speculate, ladies and gentlemen. The market structure, therefore, consists not only of the usual market players anymore, but more and more also the financial industry. It has become attractive for the finance industry to diversify. In other words, to speculate from the usual commodities and to cover alternative financial spheres. For example, many of you already heard about hot money from Hong Kong, from a Hong Kong investor buying 10,000 metric tons of rosin at once just to resell the goods after the provoked price hike and a higher price shortly afterwards. These increased financial speculations boosts additionally the volatility of the price. Another good example to mention from another commodity market is the financial market on the commodity crude oil, which is leveraged 15 times the effective volume of the physical market. Now, is speculation and price volatility recommendable? All businessmen thinking of future decision making are assuming, for example, a price or market development, and by doing so, automatically they speculate. But in this context, it is not something negative, no matter if on purchasing or on selling side to do so. Speculation is therefore, generally speaking, a normal thing. Negative, it becomes only if a seller makes a so-called short speculation. Means when someone sells something that he physically does not have in hands and therefore speculates against the market. For sure, every one of you has made the experience where something you bought in the end was not delivered in time, since in reality and at the time of purchasing, not physically in the hands of the seller, who on his side was reacting on market situation being in his disadvantage. Negative, it becomes only as well as when a purchaser says he is not in the need to enter the market since he has enough stocks in hand, but finally he doesn't, and therefore is speculating short too. The problem with this kind of speculation is that one is not putting into troubles or in disbalance only himself, but also the counterparty. By the way, that is the reason why a regulated market such as a stock exchange is requiring collaterals from the counterparty in order to cover potential future risks or obligations. Now you can understand much better why we often mention to our monthly newsletter audience the phrase, "do not speculate against the market." This from the outskirts of the fact that also in the future, generally speaking, the volatility will not level out, but still will have an important delta. Even though we believe the market demand versus supply will remain on a relatively high level, there is still the potentiality of important up and downs in pricing that can occur shortly. And with shortly, we mean within weeks or even within days. And consequently, our recommendation would be again not only A, do not speculate against the market, but we would suggest also cover your needs month by month, or as we used to say, back to back, in order to be always at the forefront of the market and subsequently be able to avoid any unnecessary risks. What we can suggest our dear customers and challenged purchasing manager for the future is to share such recommendations with their own sales specialists, who logically are trained to fix the businesses with your own dear customers over a long period of time with contracts and fixed prices. On the long run, it is counterproductive to do so, especially when floating purchasing prices of raw materials will be higher than the fixed sales price of your end products. Also, try to openly share your actual stock levels with your supplying partners. You have to give them a better understanding of your actual stock situation. They will be more than pleased to guide you professionally with their experience in regards to your purchasing decisions. it's their job to do so. The rosin market situation, ladies and gentlemen, is and will remain unchanged, at least for the time being. We are of the opinion that price volatility will not be less in the future, but rather increase. Trying to follow the market as good as possible and trying to buy your needs on shortest terms possible in order to avoid unnecessary large losses on speculation. The purchasing of a raw material is a strategic act within every company nowadays. This has to be linked very closely with a consequent risk management. And the good risk management target is always avoid losses. Or in other words, one could also say avoid speculation. Thank you for your attention.
Alessandro, thank you very much for the presentation. I'm going to open the floor here in a second for questions from the audience, but if you allow me to ask the first question, you spent a lot of time on the early slides talking specifically about China. How would you compare to China the other markets in the world and how they will develop going forward?
We have been noticing that in the last few years, all the territories are growing prominently, whereas China has been decreasing in the output. We can see Brazil, for example, becoming more and more important in the market as a raw material supplier for gum rosin, and Indonesia is always kind of on the same attractive level as they always have been. The advantage probably lies in the situation that make China harvest methods are not in line or not the same like the Brazil harvest methods. In Brazil, you must know everything is not naturally built up. The forests of rosin, of the pine trees, are not built up at random, but they are in line. You have one tree every 3 meters, and this for about 5 kilometers in each way. So they have much easier facility and possibility to harvest the crude gum. Whereas in China, the trees, the forests are kind of lying around at random, as the Mo has shown you this morning. They have to climb up the mountains and tap the trees in a very difficult environment. So the efficiency is an important asset, and the Brazilians are gaining more and more market shares on the cost of the Chinese inefficiency. But I guess China is very strong nevertheless. It's still the largest producing crude gum country in the world, with over 1 million metric tons a year. So if we look at Brazil with about 100,000 metric tons a year, it's still quite a big difference. But from an efficiency point of view, and subsequently from a pricing point of view, it becomes more and more attractive to buy also alternative territory rosin.
Excellent. Thank you, Alessandro. Let me open the floor for questions. Questions back there, if you wait for the microphone.
It's told that there are 20 new factories starting up in China, but also I heard that factories are now closing down due to the recession. So what is correct?
Yes, I heard that too. Might be the factories that are exporting the goods. I think the domestic demand in China still is largely increasing. I mean, the Chinese are shocked that they have lost from 18% to 80% a large amount of market, but still 80% is quite great. Export business has come down sharply lately. And I guess they will focus firstly on the domestic market. The demand in the domestic market is still increasing for this kind of raw materials. That has answered your question.
So you heard it also, they were talking down with the
Yeah, of course, yes. But I think more opening than closing down. Yeah.
Thank you for the question. Next question. As I've encouraged all of our audiences, the question you have on the tip of your tongue, I can assure you, is shared by many other attendees this morning, so please feel free to ask. Okay, while you're thinking about the next question, Alessandro, a follow-up to my earlier question. So we talked about all this price volatility. You talked about Indonesia and Brazil being potential alternate sources of supply. But generally speaking, how do you forecast the future of this industry?
We estimate that rosin still will remain on top of the list in regards to demand. However, potentially losing more and more market shares on hydrocarbon resin and tallow rosin. However, the availability of tallow rosin as well as hydrocarbon resin is limited and not really growing in large quantities. In China, they have, Mr. Mo was mentioning that this morning, more and more eucalyptus trees are being planted, more and more eucalyptus forests being built up in China, obviously to serve better the wood industry. Now, if big companies that are in tall oil rosin business will decide to develop the market also in China, domestic market, then obviously tallow rosin availability will increase as well in China. But still, we have so many forests of gum rosin being unused nowadays. If I look at how many forests are being built up at the moment in other territories, like Brazil, Indonesia, Central America, even in the Pacific area, there are islands with huge amount of pine trees that can be tapped for earning or for collecting crude gum. I just heard now coming from Boston, where I participated at the Pine Chemical Conference. There is one project in the Pacific, just islands, and we have the imagination. It's just crystal clear water and nice shores and sand, but they have huge territories of pine trees. And this project I heard about has a potential of 20 to 40,000 metric tons a year, depending on if they build up one factory or two. We're talking about an island. So I still think that pine trees and rosin still will hold a position, if not the most important part of the market. The other suppliers, the other type of products, alternative products, they have to dramatically increase the production in order to catch up with Chinese quantities. And China is kind of fast reacting. If you look now how fast they adjust their prices, I mean, a few years ago it took them a month or two to adjust the prices in the market. Nowadays we're talking about days. I remember in Indonesia, when starting with Petrofair, Indonesia was making the prices on a quarterly basis. Everything has changed in the meantime. Everything is speeding up the process, the technology. Look at the farmers in China, for example. They walk around with iPads, with iPhones. They are online, 24 hours a day. When I finish work at 5 or 6 o'clock in the evening, or even later, I still can see some Chinese online. Everybody knows that. They are hard-working people, and I guess they will continue to fight to keep their position.
Thank you. Additional questions, please. Okay, if there are no other questions, Alessandro, on behalf of FICA, I'd like to present you with a small gift of token of our appreciation. Thank you very much.